Hi guys, it's Matt Z. It's Friday. I thought I'll do a video today about FOMO. It's fear of missing out. So the concept of fear of missing out exists not only in trading, but it exists in every aspect of life. It could be in the rising real estate market when you want to buy a house or anything else for that matter, where you feel that if you're not in right away, you'll be missing out on an event, on an opportunity, and everything else. So just so you know, it's in our DNA to think in terms of the fact that we are missing out and something will move without us. But unfortunately, in trading, when you apply, or what you shouldn't apply, is the FOMO, the fear of missing out. And the reason is because it leads to very large losses, and it really does not contribute to anything in terms of trading. And there are certain instances that I wrote down here that I'm going to read to you right now, where I think you should be very careful. So the first thing is after a loss. Typically, you're familiar with the concept of vengeance trading, where you have a small loss, you turn it into a big loss, and so forth. But usually, the fear of missing out is that you think if you're not going to go in right away, you'll not be able to recover. So this is something that you have to stop. The second thing is when volatility spikes. So you have really announcements, interest rates announcements, or housing announcements, or any type of economic news that comes out. The volatility, spikes, and it starts in one direction, and you think that you're going to miss out if you're not in that direction. Most of the time, you would see that those kind of news events are actually ones that you have to wait. I would say 20 to 25 minutes. Wait for the markets to come down, and then decide which direction it should go. So most of the time, whenever you feel this intuition that the market is moving without you in a news event and volatility, avoid it. Most of the time, when you're going to get in, the market will reverse. Murphy's Law. Um, another time that fear of missing out comes in is when you watch charts all day, because you sit there and you're bored and you gotta have a trade and you see charts are moving one way and another way and another way, and again you want to be in, and because of this boredom, sometimes it leads to I think I spoke about it in a different blog or video, but I spoke about the fact that boredom leads to higher level of risk behavior, and this is also one of those things. Another time that you apply the fear of missing out is when you haven't had a trade in a very long time. You come back to the markets, you start analyzing it, you're feeling good, you think your method is really good, and you're saying to yourself, you know what, it's time to trade. It's not really based on anything. You just want to capitalize on a certain move based on intuition, and you just want to be part of the market. So again, another behavior to avoid. The last one is when you truly do not understand your method. So whether you trade with indicators or you use volume profile, market profile, you truly do not understand what the method is telling you to do. And you don't understand 100% the concept behind it. So you're kind of winging it and you're saying, you know what, it looks like it's okay. I think this is what it means. And then you go into it. And this is what you should avoid. You should have very clear rules about your method and how you apply it. That's it, guys. This is about the concept of FOMO, fear of missing out. If you have any questions, drop me an email, matt@optimusfutures.com. Come to optimusfutures.com. We hope to be your brokers, and I'll take care of you. Thank you, and have a phenomenal weekend. Bye.